Gearing up for the September 2026 exams in corporate and other laws? Well, you are in exactly the right place. In this explainer, we're going to unpack the absolute most critical modernization amendments that you need to know. We're talking about massive shifts in financial thresholds, a strict zero-tolerance push towards digital compliance, and some really impactful new social accountability measures. Let's get right into why these amendments are fundamentally changing the entire landscape of corporate governance.
Okay, let's quickly map out our roadmap for today. First, redefining the small company. 2, the shift to e-forms. 3, enhanced board disclosures. And finally, number 4, electronic auditor reporting. These are the crucial syllabus updates from chapters 1, 9, and 10.
All right, starting with Section 1, redefining the small company. Let's look at Chapter 1, which brings a massive expansion to the financial horizons that actually define these entities under the law.
Okay, so the paid-up capital threshold. It's taken a massive jump. Under the old rules, to be classified as a small company, your paid-up share capital couldn't exceed 4 crore rupees. But now, the government has completely blown the roof off that ceiling. The new law raises that limit to a cool 10 crore rupees. This means a whole lot more companies are going to get to enjoy those sweet compliance exemptions that come with being a small company.
And turnover limits have seen an even crazier leap. We are completely shifting from the old maximum turnover of 40 crores all the way up to a staggering 100 crores. Think about what this actually means in the real world. A business can now be generating up to 100 crore rupees in turnover and still, legally speaking, be classified as just a small company.
To really anchor these concepts in your mind for the exam, try picturing this. A little pink piggy bank representing the paid-up capital. You know, the money just sitting there inside the company. And for turnover, picture a giant stack of green cash representing the money constantly flowing in and out of the business.
So your magic number for the piggy bank, the paid-up capital, is 10 crores. You want to sear that right into your memory.
And for the flowing cash, the turnover, the exact threshold to remember is 100 crores. 10 and 100. Keep those numbers front and center.
But hey, this is corporate law, right? So there are always boundaries. You absolutely have to remember these 3 specific exceptions where these generous new thresholds just do not apply. If a company is a holding or subsidiary company, if it's a non-profit registered under Section 8, or if it's governed by any special act, small company status is totally off the table. Even if their capital is way under 10 crores and their turnover is under 100 crores, the exception holds. No small company status for them.
Moving right along to Section 2, the shift to e-forms. Let's see how these Chapter 9 accounts amendments lean heavily into the government's strict digital compliance push.
The analog days are officially completely over. Physical forms have been entirely replaced. Wherever the old law used to say Form AOC1 for subsidiary features or Form AOC2 for related party transactions, it now specifically mandates E-Form AOC1 and E-Form AOC2. It looks like a tiny little text change, literally just adding an E-dash, but honestly, it represents a total digital transformation in how these companies have to operate.
And it doesn't stop there. The XBRL filing process has been significantly tightened up. You can't just submit raw data tags anymore. This amendment explicitly requires a signed, authenticated copy of the financial statements, and that includes the board's report and the auditor's report, to be attached as a PDF document right alongside those XBRL forms. Your digital copy has to be a perfect, authenticated mirror of the physical copy.
Now, here's what's super interesting about this whole digital shift. It actually paves the way for some serious social accountability. Because, as we file these massive, comprehensive PDFs, what else is the board suddenly forced to disclose in those reports?
That brings us to Section 3, enhanced board disclosures. We're going to dive into these updates, which focus heavily on workplace protections and employee welfare.
First up, companies can no longer just quietly assume compliance in the background. They now have to explicitly state in their board report that they are complying with the Maternity Benefit Act of 1961. This is huge. It pulls women's workforce rights out of the shadows and puts them directly in front of the shareholders and the board every single year.
Plus, you definitely need to memorize these 3 specific data points required for disclosure regarding sexual harassment complaints under the POSH Act. The board report has to explicitly list 1. The number of complaints received in the year, 2. The number of complaints disposed of during the year, and 3. This is the real kicker for accountability, the number of cases pending for more than 90 days. It literally forces transparency right onto the balance sheet of corporate governance.
Finally, let's hit Section 4, electronic auditor reporting.
We'll quickly review the Chapter 10 amendments and see how auditors are finally joining the modern era.
Honestly, it provides a bit of lighthearted relief to think about how this used to be done. Just imagine an auditor discovering a major fraud, printing out a report on their physical letterhead, sealing it up in a literal envelope, and trudging down to the post office to send it to the government via registered post. Well, those days are history. The physical letterhead and sealed envelopes have been entirely scrubbed from the law. Now, it's a seamless, instant electronic filing through Form ADT-4, faster, safer, and entirely digital.
So as you review all these changes, from the massive leap to 10 and 100 crores for small companies, the mandatory E in e-forms, the vital social disclosures for the maternity and POSH Acts, all the way down to that digital ADT-4, you are looking at a fundamental transformation in how business is regulated. As the law rapidly evolves to demand instant digital transparency and incredibly strict social accountability, the real question isn't just whether you can memorize these thresholds for your exam. It's whether the corporate world is truly ready for this intense new era of hypervisibility. Think about that as you continue your prep.